Welcome to the deep dive. We take complex information, stacks of it sometimes, and try to pull out the real nuggets of knowledge for you.
That's the plan.
And today, yeah, we're immersing ourselves in something truly fascinating. It's highly specific source material, excerpts from a confidential document. Title is Petrobras Pre-Salt Blocks Divestment Playbook.
Sounds intriguing already.
It really is. So our mission today is to navigate this very specialized material. We need to grasp the huge scale of this divestment first, and then explore the incredibly detailed workflow. I mean, it's laid out step by step for potential investors.
A recipe almost.
Exactly. Get ready for some surprising facts, I think, and a rare peek behind the curtain of these massive energy deals.
Okay.
Our source, just so you know, is a confidential divestment calendar. Brasil Energia got hold of it July 30th, 2025. It details the sale of 5 specific pre-salt blocks.
And the level of detail is key here.
Right. Astonishing financial and procedural granularity.
Yeah, what's really compelling about this document isn't just that Petrobras is making a big strategic move. I mean, that's interesting in itself.
Sure.
But it's the almost surgical precision, how it outlines the exact financial mechanics, the operational steps for an investor to actually participate.
So it's not just the what.
No, not at all. It's the how the whole sale is structured, and maybe even more importantly, why they're recommending specific financial vehicles, specific strategies. It's all part of this playbook.
Okay, so let's start with the big picture then. Set the stage. What exactly is Petrobras divesting here? And, how significant is this in the energy world?
Right. So we're talking about 5 specific blocks. They're in the Sergipe-Alagoas basin, pre-salt.
Okay. Pre-salt, always significant.
Always significant. And when we talk about significance, the numbers are, they're immense. These blocks, they contain an estimated 1.1 billion barrels of oil equivalent.
1.1 billion.
Billion. And that's 2P reserves.
Okay, so 2P, remind us.
Proved and probable reserves.
Yeah.
So it's a pretty confident estimate of what's actually extractable there. It's a substantial amount of potential energy.
1.1 billion, that number alone is staggering. Just trying to wrap my head around that.
It is.
To put it in perspective for you listening, that's enough oil and gas to fuel a big chunk of a country's energy needs for years.
Absolutely.
It really underscores the value being divested, but also, wow, the scale of commitment needed from anyone looking to buy in.
Mm-hmm.
What does a figure like that tell us about Petrobras' strategy? Is it just shedding assets or something more?
Well, it definitely signals a strategic reprioritization. I mean, these are legacy assets, still valuable, obviously.
Right.
Deep water assets.
Right.
But divesting them likely means they want to focus capital elsewhere, maybe on even higher return projects or, things more aligned with their future strategy.
Makes sense.
It's also a calculated move, probably, to optimize their portfolio, maybe reduce debt, especially given the scale we're talking about.
Okay. And speaking of value, the bids are due pretty soon, October 2025.
That's right.
What's the starting price point look like, given, 1 billion barrels?
Yeah, you'd expect it to be high. The reserve price floor, the minimum they'll accept, has been set at 20% below the D&M net asset value, the NAV.
20% below NAV.
Yeah.
Huh, that seems aggressive. Low, almost.
That's definitely a statement, isn't it? It's not just a price tag.
What does it signal? Urgency.
It could. Could signal urgency. Maybe they have debt payments coming up, or maybe it's that strategic pivot we talked about, getting away from these specific assets quickly.
Or maybe just market conditions.
Or it could be a realistic assessment of, the current appetite for deep water assets, the market's volatile. What's your take on that kind of discount?
Yeah, I mean, it certainly suggests they want these deals closed fast, meet internal targets maybe, or just lock something in with current oil prices, even if they're fluctuating.
Right.
It definitely de-risks the entry for investors a bit, makes it more attractive right from the start. But what really makes this document a playbook, like you said, isn't just the scale. It's the incredible detail for investors. It reads like a literal step-by-step guide how to buy these things. So let's peel back the layers. How does someone actually get into this high-stakes game? Step 1 is data room access.
Okay.
What's that involve?
Right. So to even get just a look at the sensitive data, you need to email specific boutiques based in Rio. The playbook actually names them, XP and BTG Pactual.
Okay, known players.
Known players.
Yeah.
And critically, you have to provide a proof of funds letter.
The money question. How much?
The required liquid funds. A cool $10 million.
$10 million liquid. just to see the data.
Just to get access to the data room, yeah.
Wow. That's a serious barrier to entry, isn't it?
It is.
Does that mean Petrobras is just filtering for the absolute biggest players? Or is it also kind of signaling the seriousness of the opportunity itself?
I think it's probably a bit of both.
Yeah.
It absolutely signals this is a deal for, serious, well-funded institutional players.
Right. No tire kickers.
Exactly.
Yeah.
It filters out anyone speculative or maybe undercapitalized, ensures only those with real financial muscle and genuine intent move forward.
Okay.
And it also, like you said, underscores the value and the sensitive nature of the data. They want to know only credible potential buyers are looking at it.
Makes sense. So, okay, you've proved you have the $10 million, you're in the data room. The playbook then moves to the next big step, setting up your vehicle.
Mm-hmm.
How does it suggest investors actually structure the acquisition, the ownership?
It's very specific again. The playbook suggests forming a Cayman royalty trust.
The Cayman Trust. Okay.
And this vehicle, this trust, would then hold a 20 to 40% working interest in the blocks.
A Cayman royalty trust. That immediately signals, a very particular strategy. Why Cayman? What does that imply for investors beyond just where it's located? Why that specific vehicle?
That's a really crucial point. A Cayman royalty trust. Well, it's often used for tax efficiency, right? It allows revenue streams to pass through directly to investors, often avoiding corporate-level taxes. That can seriously boost your net returns.
Okay.
Plus, it offers a degree of, let's say, investor anonymity and certainly legal flexibility. That's pretty attractive in these complex cross-border energy deals.
Got it. And that structure then leads to the capital stack.
Exactly. The choice of vehicle kind of dictates the capital structure. And here, the playbook specifies 40% equity.
40% down, basically.
40% equity and 60% debt in the form of a reserve-based loan, an RBL.
RBL. Okay, borrowing against the reserves themselves.
Precisely. And even the pricing for that loan is specified. It's SOFR.
Secured overnight financing rate, the benchmark.
Right. SOFR plus 350 basis points.
So SOFR plus 3.5%.
Yep, which, that's a significant cost for debt, but probably still attractive for this type of loan because it's highly collateralized by the oil in the ground.
Right. They're clearly looking to maximize leverage here. 60% debt.
Definitely leaning on leverage.
Okay, so you've got your Cayman Trust, your 40-60 equity debt structure. Then, kind of surprisingly, the playbook includes a specific hedge strategy.
Yeah, that's quite detailed.
What's recommended there? Is it about managing risk or boosting returns or?
It seems geared towards financing, actually. To finance 50%, half of the required equity.
Okay.
The strategy laid out is to sell 2-year Brent $70 puts.
Sell puts. Okay, let's break that down for listeners. Selling a put option.
Right. You're selling someone else the right, but not the obligation, to sell you Brent crude oil at $70 a barrel 2 years from now.
Okay, so you collect money up front for selling that right.
Exactly. You get an upfront premium, that's income, capital you can use now.
Mm-hmm.
It helps finance part of that 40% equity slice.
Yeah, clever, but risky.
Well, there's the catch. It comes with the obligation that if the price of Brent crude falls below $70 in 2 years, you have to buy it at $70.
So you're betting oil stays above $70, essentially.
You're betting it does, or you're comfortable buying at $70.
Yeah.
So yes, there's definitely market risk attached. It's a way to generate capital, but it depends heavily on your view of future oil prices.
So it's a calculated gamble, leveraging a specific market outlook on oil to reduce your immediate cash outlay. That's pretty sophisticated stuff. Requires a certain risk appetite.
Absolutely, and a strong conviction about where oil prices are headed.
Okay. And finally, the playbook gets to the payoff. Target IRR. Internal rate of return.
Mm-hmm. The magic number.
What kind of returns are investors supposed to be aiming for with all this financial engineering?
The targets are, let's say, ambitious. Quite aggressive.
How aggressive?
30 to 40% ungeared.
Ungeared, meaning
the return just on the investment itself before you factor in the effect of all that debt, the leverage.
Okay, 30-40% is already pretty high for this kind of asset.
It is. But then, with the prescribed leverage, that 60% debt, about 1.5 times leverage, they mentioned the target IRR jumps to 50% or more.
50% plus.
50% plus.
Wow. Okay, those are ambitious returns. It highlights the potential value they see here, definitely. But also maybe the risks or the long-term nature of the investment.
It has to, right?
Yeah.
You don't target 50% IRR without significant perceived value, but also significant risk.
Yeah.
What does setting targets that high tell us about the market for these kinds of assets right now?
Good question. I mean, it suggests Petrobras believes there's huge upside potential even with that initial 20% discount.
Right.
Maybe they expect strong competition for these blocks, or maybe the assets themselves are just seen as incredibly productive, capable of generating massive cash flows even in today's, volatile energy world.
Yeah, I think those targets are specifically designed to attract the most, let's say, aggressive and sophisticated capital out there. They're signaling high risk, high reward.
So bringing it all together, what does this mean for you listening to this? Why should you care about this incredibly detailed playbook for selling off some oil blocks in Brazil?
Well, if we connect it back to the bigger picture,
Mm-hmm.
this specific example, this playbook, it gives us a really unique window, doesn't it,
Mm-hmm.
into the sophisticated mechanics of how these huge, large-scale asset sales actually happen in the global energy market.
Yeah.
It's way more than just a transaction.
Right. It's not just Petrobras sells assets.
Not at all. It shows the really intricate financial engineering involved, the specific legal structures they choose for, strategic advantage, like that Cayman Trust,
Yeah.
and the meticulously calculated risk-reward profiles that underpin these massive international deals. It's honestly like a masterclass in how these high-stakes games are played.
From needing $10 million just to look?
Yeah, from the proof of funds just to get in the door all the way to those super ambitious target returns that are meant to drive investor interest. It gives you a real sense of the depth, the complexity that's usually hidden beneath a simple news headline.
So today we dove deep into, well, the confidential world of Petrobras pre-salt block divestment.
We did.
We saw the sheer scale, 1.1 billion barrels of oil equivalent. Incredible number. The surprising detail, like needing $10 million liquid just for data access.
The entry fee.
Yeah. And the really specific financial engineering Cayman trusts, reserve-based loans, even hedging with Brent puts, all aimed at hitting those incredibly high returns.
It really is a powerful testament, I think, to the sophistication and the layered complexity involved in the kinds of transactions that fundamentally shape the global energy landscape we see today.
Okay, so as you reflect on all this, here's a provocative thought to leave you with. Given this highly specific, really aggressive financial playbook laid out for these pre-salt blocks, what does it truly tell us about how valuable deepwater oil assets are perceived to be long-term, especially in a global energy market that's evolving so rapidly?
Good question.
What does this kind of detailed plan imply about where capital might be heading in the traditional energy sector, especially, as the whole world is debating the energy transition? Something to think about.